Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Shola, please, can you mute your speaker? All right, once again, we are welcome to tonight's class. Our performance management class shall continue. For those that were in class last week, we started discussion on modern costing system. You can mute. For those that were in class last week, we started discussion on modern costing system. We explained what are the modern costing systems. These are costing systems that were developed to be able to meet the needs of the modern manufacturing environment. The modern costing system. Our costing system developed to address the needs of the modern manufacturing environment. The modern manufacturing environment is highly automated. Production processes are driven by technology. Most of the overhead costs incurred arises as a result of technology. For this reason, accountants, finance managers, management accountants developed modern costing system. We compare this with the traditional costing system. Our traditional manufacturing environment was driven by human labor, less of technology. Production in the 60s, production in the 70s were driven by human beings. We now have the traditional costing system, which include the absorption costing system as well as the marginal costing system. This costing system may not be sufficient to address the concerns of the modern manufacturing environment. This costing system, the traditional costing system, may not be sufficient to address the concerns of the modern manufacturing environment. For these reasons, management accountants developed modern costing system. The modern costing system include life cycle costing, We discussed this last week. Target costing. We also discussed this last week. Tonight, our focus is on activity-based costing. What is activity-based costing? Why do we require activity-based costing? Activity-based costing is a costing system that is developed to correct the deficiency of the traditional absorption costing system. Let me take that again. Activity-based costing is a costing system that is developed to resolve the deficiency of the traditional absorption costing system. Under the traditional absorption costing system, overhead costs are absorbed into products using production volume. Under the traditional costing system, overhead costs are absorbed on production volume as measured by labor hours or machine hours. Under the traditional absorption costing system, overhead costs are absorbed into products on the basis of production volume. This production volume is represented by the labor hours or machine hours. However, what we call overhead cost, the overhead cost may not be as a result of labor hour or machine hour. What is overhead cost? Overhead costs are indirect costs. You can divide cost. Cost can be divided into two. Cost can be divided into two. Direct cost and indirect cost. Direct cost and indirect. We can divide cost into two. We have the direct cost. These are costs incurred and can be traced to a particular product. Direct cost. These are costs incurred and can be traced to a particular product. Direct costs include direct material cost, direct labor cost, direct expenses. Our direct costs include direct material cost, and direct expenses. The addition of this cost, addition of direct material cost plus direct labor cost plus direct expenses is called prime cost. For direct cost, we can trace it to a particular product. In that case, we only allocate to that product involved. Direct costs can be traced to a particular product. For example, Nigerian Bottling Company manufactures 3 major products: Coca-Cola, Fanta, and Sprite. These are the 3 major products of Nigerian Bottling Company. Any cost incurred that can be traced to a bottle of Coke, that cost will be allocated to Coke. That becomes direct. Any cost incurred that can be traced to a bottle of Fanta, that cost will be allocated to Fanta. That is direct cost. Any cost incurred that we can trace to a bottle of Sprite, that cost will be allocated to Sprite. For direct cost, there is no accounting problem. We can easily account for direct cost. For direct cost, we don't have any problem. There is no accounting problem for direct cost. We can easily account for direct cost. We now have indirect cost. Second category, the indirect cost. These are costs incurred, but cannot be traced to a particular product or service. These are costs incurred, but cannot be traced to a particular product. Indirect costs include indirect material costs, indirect labor costs, and indirect expenses. Indirect material cost, indirect labor cost, and indirect expenses. The summation of indirect material cost plus indirect labor cost plus indirect expenses is called overhead cost. Overhead cost contain all the indirect costs. Because these costs cannot be traced to a particular product or service, that creates accounting problem. How do we account for overhead costs? For example, business rents, factory rents. Let us assume Nigerian bottling company has rented a factory. Annual rent is 5 million. At that factory, the Nigerian bottling company manufacture Coke, Fanta, and Sprite. And we have incurred factory rent of 5 million. This 5 million naira cannot be traced to a bottle of Coke or a bottle of Fanta or a bottle of Sprite. The 5 million naira is for all the products that is produced at the factory. So the question is, how do we apportion factory rents to the various products produced in the factory? What percentage are you going to allocate to Fanta? What percentage are you going to allocate? Are you going to apportion to Coke? That creates a problem. Accounting for overhead creates problem. How do we apportion these costs to the various products? There are two methods that is being used. There are two methods of accounting for overhead costs. We have the traditional absorption method. The traditional absorption method. Under the traditional method, all the overhead costs are absorbed on production volume as measured by labor hours or machine hour. All the overhead costs will be accounted for by labor hour or machine hour. That's a major flaw. That's a major deficiency in cost accounting. Using labor hour or machine hour to account for overhead is a major deficiency, because overhead cost, several factors has contributed to the overhead cost. Different activities has contributed to the overhead cost. It will be wrong to use a single activity, labor hour, to account for overhead cost. To correct this deficiency, activity-based costing was developed. To correct this defect, activity-based costing was developed. What is activity-based costing? A costing method that uses different activities, that uses the activities that has given rise to the overhead, the activities that has contributed to the overhead as a basis for apportioning the overhead cost. Yeah, good night. Activity-based costing is a costing approach, an approach to product costing that aimed at using only cause and effect cost allocation, cause and effect. That is, the activity that causes cost should be used to allocate the cost. The activities that give rise to the overhead cost should be used as a basis for apportioning and allocating the overhead cost. In this case, the cost reflects more accurately in your product cost. In modern manufacturing environments, several overhead costs are generated, which are not related to labor hours or machine hours. Hence, activity-based costing is believed to result in efficient cost allocation. Product cost reflects more accurately the activities that has given rise to the cost. We have explained more. We have explained at a great length. May God give us a better understanding. Now, outline of activity-based costing system. If you are to use activity-based costing to account for overhead, what are the steps to be taken? 1, identify the major activities of the organization. Identify the major activities of the organization that sell products. Identify the major activities of your company that support manufacture of the company's products. Step 2, you are going to use cost allocation and apportionment to charge overhead costs to each of these activities. Using cost allocation and apportionment method to charge overhead costs to each of these activities. That will give rise to cost pool. Step 3. Identify the factors which determine the size of the cost of an activity. identify the factors which determine the size of the cost of an activity. These factors are called cost driver. A cost driver is a factor which has most influence on the cost of an activity. A cost driver is that factor that causes cost. Step 4. For each cost pool, activity cost center. For each cost pool, the activity cost center calculates the absorption rate per unit of the cost driver. Cost driver absorption rate. The absorption rate per unit of a cost driver. This is calculated as total overhead of an activity divided by total number of the cost driver. Then the final step, charge overhead cost to product for each activity on the basis of their usage of the activity. That is the number of cost driver they use. Overhead as charged by absorbing them into product cost at a rate per unit of cost driver. All right. These are the steps by God's grace we shall demonstrate tonight. While the lecture is going on, please, you can refer to page 124, question 4. That is the question we are solving tonight. What are the merits? What are the advantages of activity-based costing? It provides a realistic product cost, most especially in advanced manufacturing technology. Number 2, it enhances the tracing of overhead costs to the product. Number 3, it recognizes activities which cause cost. The activities that created the cost, not the product. Then finally, it recognizes the complexity and diversity of modern manufacturing environments, modern production, by the use of multiple cost drivers. Many of which are transaction-based, rather than based solely on production volumes. Please, you are going to try to learn like 3 or 4. What are the limitations? Limitation 1. How do we identify the cost driver? The preference for particular cost driver. How do we know? In a typical company, several activities. Go and look at engineering company. Different activities. How do you know that this is the factor that caused this cost? Number 2, limitation. The issue of common cost. Where a cost is incurred that is common to all the products. Like some companies, they have staff boss. All staff, regardless of your department. You are entitled to follow staff boss. Every day, company incur costs. Now, this is a common cost. It is difficult to identify a single activity. You have a driver that drives the bus. We have to fuel the car. We have to do repairs. We might need to insure the bus. Facing difficulties, number 3. It is not always apparent which products should carry the trace overhead. All right. Any question, please? I want to start with question 4 today. Page 124/125. Sedeco Nigerian Limited. Please, can we refer to this question? Please just Right. Goodness. Are we good to go, please? Can we go ahead with the question? Are we set?
Yes, sir.
I wonder why nobody is speaking.
Yes, sir. Yeah, let's go with the class. Sedeco Nigerian Limited
manufactures and sells 3 products: alpha, beta, and gamma. For some time now, the company has been concerned about its cost allocation system and has been searching for a more efficient way of cost allocation. The company recently employed a management accountant who informed the management that activity-based costing is a more efficient cost allocation system, which also leads to improvement in cost accuracy and reduction. The management accountant discovered that the company has direct materials, direct labor, and 5 indirect cost pool, which represents the 5 activity areas. The prior product costing system uses the 2 direct cost categories and a single indirect cost pool where overhead are allocated using direct labor hour. Please underline. Our prior product costing, overhead are allocated using direct labor hour. The following information is provided for the next period: alpha, beta, gamma, production and sales. You are going to produce 20,000 alpha, 12,500 beta, and 5,000 gamma. You are giving direct material cost. You are giving direct labor hours. To produce 1 unit of alpha, we require 10 hours of labor. To produce 1 unit of beta, we require 8 hours of labor. And 4 hours of labor is needed to produce 1 unit of gamma. We have the machine hour also. Number of production runs, number of component receipts, number of production orders. Next, direct labor is paid at 100 naira per hour. Overhead cost in the period are expected to be as follows. The overhead cost includes setup overhead, machine overhead, goods inwards, packaging overhead, engineering overhead totally. Also, the company is considering the pricing of the 3 products because sales prices have remained uncertain as shown in the table below. We have the products, alpha, beta, gamma. We have the probability, and we have the possible price. The selling price for alpha may be 2,000 at a probability of 0.6, or 2,200 at a probability of 0.3, or 2,300 at a probability of 0.1. We are giving for beta 2, and we are giving for gamma. If you watch out, if you add the probability, it must equal to 1. Your probability cannot be less than 1. Summation. If you sum all the probability, it cannot be less than 1 or more than 1 or 100%. If you are given in percentage, if you sum up, all the probabilities must give you 100%. If you are dealing with ratio, if you sum up, the summation of all the probability must give you 1. Requirement A. Calculate the unit cost of each product using prior product costing system, the traditional cost, and activity-based costing method. All right. Calculate cost using the prior product costing. Trying to copy this. All right. Base cost. So let's set the 2 down. So again, off record, you are likely to have a question tested here. This dies. Examiner is likely to test one question. This dies. All right, please give me like 1 minute. I will be back with the class. Allow me like a minute. Let's go on with the class. That's to put on my gel. All right, let's go on with this solution now. I need to calculate cost per unit for each product. Our products, we have alpha, beta, and we have gamma. This company manufactures 3 products. Start with your direct material cost. Calculation of cost per unit of each product. You start with your material cost, direct material cost. Of course, to manufacture these products, we are going to incur material costs. Back to the question. Material cost, 250 naira, 200, and 180. Pick this. $250, 200, 180. Next, direct labor cost. Back to the question. We have direct labor hours. 10 hours for alpha. 8 hours for beta. 4 hours for gamma. You are giving the labor hours. And we are told that labor hour, direct labor is paid at 100 naira per hour. We need to do small work here. Let's come down small here. Working 1. Direct labor cost. For alpha, you require 10 hours of labor to produce 1 unit. And labor is paid at a rate of 100 naira per hour. 10 hours multiplied by 100. That will give you 1,000 naira. That is direct labor cost per unit. For pizza, to produce 1 unit, we require 8 hours of labor. Labor rate per hour, labor cost per hour, 100 naira. That will give us 800 naira. For gamma, to produce 1 unit of gamma, we require 4 hours of labor at a rate of 100 naira per hour. That will give us 400. Return. This is 1,800, 400. In this question, there is no direct expenses. The addition of direct material costs plus direct labor costs will give us prime cost. Prime cost. This is 1,250. 1,000 naira. 580. You have gotten your prime cost. Cost that can be traced to individual products. We now have overhead cost. Overhead cost. That is the indirect cost. Examiner says, look at it. The prior product costing 60. Use the 2 direct cost categories and a single indirect cost pool where overhead are allocated using direct labor hours. Under the product costing system, overhead will be allocated using direct labor hour. In that case, you are going to calculate overhead absorption rates. Look at it. Working tool. Working tool. Calculation of overhead absorption rates using direct labor hour. Examiner says overhead is allocated using direct labor hour. In that case, your overhead absorption rates, overhead, let me know this. Overhead absorption rates is equal to let me take this one first. Is equal to total overhead cost divided by total direct labor hours. You can see now. Let's go back to the question. We have setup overhead 1.4, machine overhead 9 million, goods inwards overhead 2.8, packaging overhead 2 million, engineering overhead 1.6, total overhead 17 million. If you look at this question, none of this overhead is related to labor hour. The company uses labor hour to allocate the overhead under the traditional costing. That was the explanation we tried to buttress. Under the prior product costing, overhead is allocated using a single factor, which is labor hour or machine hour. In this question, the examiner says we are using labor hour. Now pick the total, 14 million. Then total labor hour. Direct labor hour. Total is 320 million. Sorry, 320,000. We shall explain later. Because if you plus 10, plus 8, plus 4, it will not equal to 320. We are going to explain later how they got 320. But the total direct labor hours is 320,000. Now pick these two. Return here. Total overhead 70 million. Total labor hours 320,000. This plate absorption rate 53.125. The absorption rate per labor hour. Our absorption basis is labor hour. You are going to put per labor hour. Please reconfirm this calculation.
Accurate.
The
Sir.
overhead absorption rate per labor hour is 53 naira 0.125. When you have gotten this, now calculate overhead cost per unit. Working 3. Overhead cost per unit. Examiner says overhead is absorbed using labor hour. In that case, you have your alpha products. To produce 1 unit of alpha, we require 10 hours of labor. And we are going to absorb at the rate of 53 naira 0.125 labor hour multiplied by 53.125. You go to beta. Labor hour here is 8 hours at a rate of 53. $53.125. For gamma, labor hour is 4 hours at a rate of 53.125. Please work this out.
That the first one is 531.25. The second one is 425. And the third one, 212.5.
Correct. Well, let's continue with the class. The first one, 531.25, 425. Then what do we have here? 212.5. Now return to your calculation table. Overhead cost per unit, 531.25, 425, 212.5. Now sum up. Prime cost plus overhead cost will give you unit cost, that is production cost per unit. Production cost per unit. Summation here, what do we have? 1,000.
1,781.25.
Next.
1,425.
1,425. Then the last one.
792.5.
792.5. You have resolved a Roma figure 1. Calculation of production cost per unit using the traditional direct labor hours absorption. You have resolved a Roma figure 1. Any question, please? Any question, please? All right, we go figure 2. Now look at calculation of product cost per unit using activity-based costing. Can look at calculation of production cost per unit using the activity-based method. All right, I can come here now. Let me paste this again. I'm trying to paste this here. All right, that's good. I'll pick my pen. Now look at it. Calculation of units cost per product. Our products, the company produce alpha, beta, and gamma. Again, you start with your direct material cost. Direct material cost, 250 naira, 200 naira, 18. You pick your direct material cost, direct labor cost. This is 1,800, 400. You sum up. That will give you your prime cost. Prime cost, 1,250, 1,000 naira, 58. These are direct costs. Now we need to add overhead. And we are using activity based. We are not using labor hour again. We are not using just labor hour for the whole overhead cost. We are going to look at the various activities and use the activity to allocate our overhead. Let's go to this. Look at the various activities. Set up overhead cost, 1.4 million. Examiner says your cost driver is production run. Examiner has done step 1, step 2, step 3 for you. Remember step 1, identify the major activities of the organization that support manufacture of the company's product. What are these activities? For this company, the activities are setup cost, setup activity, machine activity, good inward activity, packaging activity, engineering activity. Examiner has identified the various activities. Step 2, use allocation and apportionment to calculate overhead cost for each activity. Examiner has also done that for you. Overhead cost for setup, 1.4. Overhead cost for machine, 9 million. Overhead cost for good inward, 2.8 million. Overhead cost for packaging, 2 million. Overhead cost for engineering, 1.8. Step 3, identify the factor that contributes to the cost of each activity. That is the cost driver. Look at it here. Examiner says production run contributed to setup. Machine hour generated machine cost, machine overhead. Component receipts created goods inward overhead. Production orders created packaging and engineering overhead. Examiner has done step 1, step 2, step 3 for us. We now start calculation from step 4. We need to calculate overhead absorption rates per cost driver. Now come here, please. Oh. We can leave this space. Our working start from here. Working 3. Calculation of overhead. Calculation of absorption rates. Absorption rates per unit of cost driver. You start with set up cost driver rates. This is equal to total set up overhead divided by, this is not straight, divided by. Now, what is the cost driver for setup? Examiner says production runs. Look at it here. So total production runs. Let's go and check. Look at it, please. Number of production runs for alpha 5, for beta 10, for gamma 25, totaling 40. Total production run. Divided by total production runs. So I'll calculate total overhead for setup 1,400,000. Total production run 40. Please divide. What do we have?
$35,000.
10,000.
35,000.
Oh, 35,000. This you must put a basis. 35,000 per production run. Look at it. We divided by what? Production run. 35,000 per production run. There must be a basis. The overhead is calculated. Setup overhead is to be allocated on the basis of production run. We now go to the products. We need to allocate this. Look at this. We have alpha. We have beta. We have gamma. Production run for alpha 5. Production run for beta 10. Production run for gamma 25. And we said per production run, the overhead is 35,000 multiplied by 35,000. This is called allocation.
That's 175,000.
Thank you. This is 175,000 multiplied by 35,000. This is 350,000 multiplied by 35,000. This will give us how much?
875,000.
875. If you sum up these three, it must give you back 1.4 million. Because the total overhead for setup is 1.4. It must give you back the total.
1.4.
We have
correct.
allocated,
Yeah, it's correct, sir.
we have allocated setup overhead to the three products on the basis of production run, not labor hour. The next one, machine overhead. Second one, second working now. Machine cost driver rates, calculated as total machine overhead, divided by, let's go and check. What is the cost driver?
Machine hour.
Thank you. I just want to take student there again. I'm not saying machine hour is the cost driver.
Machine hours.
We need to calculate machine hour total. Although we are giving machine hour for product alpha 5 hours, product beta 6, product gamma 5. Examiner says total machine 100,000. Total machine hours. Space here. Total machine hour, alpha, beta, produce 1 unit. We require 5 hours of machine. For beta, 6 hours of machine. For gamma, 5 hours of machine. To produce a unit, you require 5 hours of machine for alpha. Multiply by number of units produced. For alpha, we produce 20,000 units. For beta, we produce 12,500 units. For gamma, we produce 5,000 units. Let me show you. Some might not open the question. Look at it. Production and sales unit. Alpha 20,000. Beta 12,500. Gamma 5,000. So you can return here. 5 multiplied by 20,000. 100,000.
1,000.
6 multiplied by 12,500.
75,000.
75,000 hours. This is machine hours total. Machine hours total. Here I have 25,000 hours.
Yes, sir.
That's 200,000.
That total will now give me 200,000 hours of machine. That is how the examiner got 200,000. In case you are not giving, you can calculate yourself. You can now calculate machine cost driver rate. You can now calculate machine cost driver rate, which is equal to total overhead of machine, 9 million naira, divided by total machine hours, 200,000 hours of machine. Please divide. What do we have?
45.
Complete it, please.
45 naira
It's not complete yet.
per machine hour. Per machine hour.
Thank you. 45 naira per machine hour. Please, it's very important for me to stress this. You have to put that basis to it. Examiner is particular about that information. Don't just write 45 naira. 45 naira per machine hour. Per machine hour. Now go to allocation. Allocate to the various products. Machine overhead cost. Allocation. We have alpha. Total machine hour here, 100,000 machine hour. And we said 45 naira per machine hour multiplied by 45. Go to beta. Total machine hour require 75,000. And we said 45 naira per machine hour. Go to gamma. Total machine hour require 25,000 multiplied by 45 naira per machine hour. How much here? 4 million.
4.5.
Thank you. The next?
3,375,000.
3,375,000. The last one?
We have 1,125,000.
1,125,000. If you sum up these three, you must have 9 million naira.
9 million naira.
That is total for machine. You have
Yes, sir.
allocated the 9 million to the various products. 4.5 to alpha, 3,375,000 to beta, 1,125,000 to gamma, on the basis of machine hour. We now move to number 3. Number 3 overhead. That is goods inward. Is that not? Number 3. Goods inward cost driver rates. Let's go and check.
Component receipts.
Look how we're putting. Thank you. Examiner says your cost driver is component receipts. Let's now go and check. Number of component receipts. 15 for alpha. 25 for beta. 120 for gamma, totaling 160. You now return here. Please note, so component receipt is not related to per unit. Unlike machine hour is related to per unit. Labor hour is related to per unit. Component receipt is independent of number of units produced. So you are not going to multiply 15 multiplied by 20,000. Component receipt is independent of number of units manufactured. Production runs is independent of number of units manufactured. Production orders is independent of number of units manufactured. In that case, you are not going to multiply component receipts by number of units manufactured, so that you don't get it confused. Labor hours relate to unit manufacture. Machine hour relate to unit manufacture. And you also note here, look at machine hour. 5 plus 6 plus 5. Obviously, it's not equal to 200,000. 10 plus 8 plus 4. Obviously, this is not equal to 320,000. But if you look at production run, 5 plus 10, 15. 15 plus 25, 40. That clearly shows that production runs is independent of number of units produced. Component receipt, 15 plus 25 plus 120. That will give us 160. This is independent of unit produced. So don't multiply with unit produced. We return here. Oh, Lord have mercy. This becomes total goods inward overhead divided by total number of components received. That is 2.8 million divided by 160. What do we have, please?
17,500
per goods
per
inward.
components of
A components receipt.
per components
Yeah,
of
who is going to put it
receipts.
correctly? Thank you.
17,500 naira of components per component of receipts.
Per component receipt. Not per good inward. So it is your divisor you are going to use. Per component receipt. You now go to the allocation table. We need to allocate, we need to share 2.8 million to 3 products. Product alpha, product beta, and product gamma. Component receipt for alpha, 10. Component receipt for beta, 15. Component receipt for gamma, 120. Per component receipt, this is 17,500. Multiply
It's 15 for alpha.
Yes, ma'am. What do you have?
So there's a mistake. Alpha is 15.
15. Beta is 25.
Then beta is 25.
Oh, okay. Thank you. Alpha is 15. Beta is 25. 15, 25. Now multiply.
262,500.
262
for alpha,
100.
500.
Next,
437,500 for beta.
437,500.
500.
Next,
2,100,000 for gamma.
now sum up the three. You must have 2.8 million.
Yes, sir,
2.8
correct.
million.
Why I like this topic is that if you are correct, we know. As you are solving, there's a way to check. We now move to packaging. Number 4, packaging cost driver rate. This is equal to total packaging overhead. Packaging overhead divided by total production order. Examiner says total number of production order. Look at it here. Packaging is 2 million. Order 15, 10, 25, totaling 50. 2 million divided by 50.
Nigeria today.
Are you talking to us? 2 million naira divided by 50.
40,000 naira per
Production
order.
Correct. Per production now go and allocate go and apportion the 2 million to the 3 products. Allocation. I have alpha, I have beta, I have gamma. Production order for alpha, 15. For beta, 10. 25. At a rate of 40,000 naira. What do we have here?
600,000.
600,000.
400,000.
1 million.
1 million. Sum up.
2 million.
2 million. Then the last one, engineering cost driver rates. Engineering cost driver rates. This is equal to total engineering overhead divided by total number of production order. That was the examiner position. He said your engineering overhead, the cost driver is also production order. Total engineering overhead, 1.8 million. Total number of production order, 50. What do you have here?
36,000
6,000.
production order.
Production order.
Per production order. Very correct. Now we go to allocation. Allocate the 1.8. To the various products. Alpha. We have 15 production order here. Beta. 10. Gamma. 25 production order. Multiply by 360, no, 36,000, 36,000, 36,000 equal to
40,000.
540, the first one for Alpha.
540,
360,000.
For Gamma, 900.
For Beta,
Gamma.
360.
Yeah.
all right, totaling 1.8.
Yes, sir.
All right. We have apportioned and allocate all the overhead to the different products. You now collate your results. It's just 1 minute. You now collate your results. Look at the collation. Let's go to the next page. Oh. Overhead cost per product. Your products you have alpha. you have beta, and you have gamma. We start with setup. Setup. Here we have 175,000. We have to just go back to it.
350,000 for beta.
What we have calculated before. Assuming you are putting it down, you can just give me. Look at this. 175, 350, 875. I'll pick that. 175, 350,000.
350,000, 875,000.
I will move to machine. Here, 4.5 million.
4 million.
Here, 3 million,
375.
Here, 1 million.
125,000.
Correct. Then we move to goose inward. What do you have here?
262,500.
262,500. Next.
437,500.
437,500. Next.
2,100,000.
Correct. 2,100,000.
100,000.
We now move to packaging. Is that not?
Yes, sir.
Here we have how much?
600,000. 400.
600.
And 1 million.
400 here.
400,000. Yes, sir.
1 million here.
Million. Yeah.
Then the last one is engineering.
540,000.
540.
360,000. 900,000.
900. You have collated your results. Now add. Get total overhead for alpha. Total overhead for beta. Total overhead for gamma.
77,500 for alpha.
Please.
For alpha, 6,77,500.
6077 500. Is that correct?
Yes, sir.
Now beta.
4922. 4922. 500. 500.
All right.
Should we go ahead, sir?
6 million for
million.
Ghana.
6 million rand.
Yes, sir.
Yes, sir.
All right. Now, you can check. Sum the three together. 6,077,500 plus 4,922 plus 6 million. It must give you 17 million.
70 million, round figure.
Yes. Because the total overhead incurred by the company is 17 million. If you check the question, we have gotten total overhead per product. What is overhead cost per unit? In that case, introduce number of units. Production units now. Here we are, this is Naira amount. Here you have 20,000 units. Here 12,500. Here you have 5,000 units. Now get
This is
you can now get overhead cost per unit.
for Alpha. We have 303.
That is 303.885.
303.875.
Or 75. You can also use that, no problem.
For Beta, we have
You can use 75.
393.8.
Yeah, 393.8. Next, 1,000.
200 for Gamma. 12.
You have gotten your overhead cost per unit of product using activity base. Now return to your first page. Yeah, 303.8. Production cost per unit. Prime cost plus overhead cost. The first one,
1553.875. 1553.875.
1553.
0.875.
0.875. Next,
1393.8.
390.8.
Then the last one, 1780.
17. Cost per unit. Done with requirements. We have treated this and this. We have like 30 minutes more. Requirement B. Calculate expected sales prices for the 3 products and the profit or loss that will arise from the implementation of activity-based costing and the traditional. Please, can we mute? If you want to talk outside the class, you can mute. So let's go back to that requirement. Calculate the expected sales prices, that is selling price, for the 3 products and the profit or loss that will arise from the implementation of the activity-based costing method and the traditional costing method. Let's go back to this question. Examiner says the company is considering the pricing of the three products because sales prices have remained uncertain as shown in the table below. We are not sure. Let's copy this table. All right, requirement B now. Look like that. Wow. Tired. Let's see the copy now. Which one are you copying? Paste. Now look at alpha. We are not sure the selling price. The price may be 2,000 with a probability of 0.6. Or 2,200 with a probability of 0.3. Or 2,300 with a probability of 0.1. We are now asked to calculate expected selling price. Let me explain this again. I can explain in another form. If we charge a price of 2,000, 60% we buy alpha. If you charge a price of 2,200, 30% we patronize alpha products. 2,300, 10% we patronize alpha. In that case, you can look for the average. The average is called expected price. Now I want to calculate expected sales price. Look at it, please. Alpha. Expected sales price is equal to probability 0.6 multiplied by the corresponding price, 2,000, plus probability 0.3 multiplied by the corresponding price, 2,200, plus 0.1 multiplied by 2,300. This is how to calculate expected selling price. Work this out. Your final answer is 2,090.
90, yeah.
You go to beta. Expected sales price equal to probability 0.5 multiplied by the corresponding price 2,000 plus probability 0.3 200 plus probability 0.2 multiplied by 2,250. Final answer.
$2,110.
Correct. 2,110. Then go to gamma. Expected sales price. $0.7 multiplied by 1,600. 0.2 of 1,700. 0.7 multiplied by 1,6 plus 0.2 multiplied by 1,7 plus 0.1 multiplied by 1,8. Final answer.
1,640.
You have calculated expected sales prices for the 3 products. Next, the profit or loss resulting from using activity-based costing and traditional costing system. Calculation of profits or loss using traditional costing system. You pick your products. Product alpha, product beta, and product gamma. Pick your expected sales price, selling price. Here is 2090, 2110, 1640. Now go and pick your product cost. Here you say you want to use using traditional costing system. In that case, you are going to pick the cost for traditional costing system. That was calculated in A1.
1781.25.
Yeah, thank you. Look at this. Let's show it. Look at this. This is the traditional cost. 1781.25.
1425.
Okay, thank you. So give me later. Let me go back to that page.
1425 for beta, then 792.5 for gamma.
Please just allow me to get to that place. And look at it now. Yeah, the cost here 1781.25.
25.
1,425. What do you have here?
92.5.
792.5. Selling price minus cost price. We give you your profits.
Profits of
Profit per unit.
308.75.
308.75. Next.
675 for better.
675. Next.
That is 685. 685 for better.
All right, ma. Next.
847.5.
8. Is it correct?
Yes.
Yes, sir.
Now you have gotten profit per unit. Multiply by number of units sold. Says volume. Examiner says production and sales. For alpha, 20,000 units. For beta, 12,500. This is Naira amount. For gamma, 5,000 units. Now get total profit per product. Total profit.
For better, we have 856.
856 or better.
2,500. Yes. 8,562,500.
Just allow me, please. 8,562,500.
Yes, sir.
Next.
For gamma, we have 4,237,500.
4,237,500. For alpha.
Then
6,175,000.
175,000.
75,000.
Thank you. If you look at the traditional costing system, it shows that product beta is giving the company the highest profits.
yes.
Now let's go and look at activity base. Calculation of profit or loss. It's serious working tonight. We have exhausted all the space. No problem, we have to improvise. Need just 1 minute.
Oh.
Wow. It's a whole lot. Okay, I have to moving this one down. Because on the spacing. Because on the on that line, law. They just 1 minute. This should be expected. This production costs. This is total now. You should not enter that. Once you enter that margin, it will move. Like this one now is too close to that margin. It's too close. Wow. Right. We're almost done. What can we do? I'll need more space. Let me do like this. If you're going to give me, you got to insert above, more, above. Okay, let me expand this. So, otherwise it might not look so. Okay, let's go on. Next. Calculation of profits or loss using activity based costing. When you underline, then your products alpha, beta, and gamma. Your expected selling price will not change. 2090, 2110, 1640. Now, production cost using activity base. Let us check production cost per unit using activity-based cost. Look at it here. 1553. Can we see it?
Yes, sir.
Now, please give me this figure, if you have it.
1553.88.
That's correct. So I'll return here. 1553 points, approximately 8, no problem. Next.
Yes, sir. 1393.8.
1393.8. Next.
Yes, sir. 1780.
Now get your profit or loss per unit. Selling price minus cost price.
For alpha, 536.12.
536.1.
0.1.
12.
For
Next.
better,
For better, 716.2.
716.2.
16.2.
For Gamma, a loss of 140.
Loss of 140.
Yeah.
Yes.
So profits or loss per unit.
The cost per
Now
unit.
get the total. Introduce volume. Volume of sales. Here 20,000 units sold. 12,500 sold here. 5,000 units sold here. Next.
For Gamma, we have 700,000.
Loss.
A loss of 700,000. Is that not?
Yes, sir. A loss.
Yes, sir.
Then for Beta, we have
For better.
8,952 to 500. That's profits.
8,952 to 500.
For Alpha, 10,722.
10,722,500.
10 million.
722,400.
722,400.
500.
Oh, 500.
Yes, sir.
Thank you.
It's 400, sir.
4 or 5?
400.
400, sir.
All right. This is total profit per product. Total profit per product. Now, if you look at this, it's very obvious that product Gamma is a problem. Our activity-based costing has helped us to identify a product that is not correctly, that is incorrect with incorrect product cost. Because the product is incorrectly being costed, our selling price is not sufficient. Activity-based costing has helped us to identify that where activities are used to allocate costs, then the selling price of product Gamma is wrong. That selling price for Gamma is not correct. We are charging a price below the cost, cost of the product. You are done with requirements. Requirement B. Requirement C. For 2 marks. State 2 reasons. No, state reasons why activity-based costing approach may be preferred to traditional absorption costing approach in modern manufacturing environment. What are the reasons why activity-based costing may be preferred to traditional absorption costing system in a modern manufacturing environment? These are the advantages of advantages of activity-based costing. Look at it here. Look at the advantages. It provides a realistic product cost, most especially in advanced manufacturing technology. It recognizes the complexity and diversity of modern manufacturing environment. By the use of multiple cost drivers, many of which are transaction-based. Right? You can pick any of these, maybe two of these, to answer that question. Ooh. Any question, please? So I'll put it here, requirement C.